In this video, what we're going to do is do some calculations on a convertible bond, and specifically tie it to the idea that a convertible bond is equal to a bond plus call option on the underlying stock. So we're going to calculate what is the value of that bond, what are the call options worth, how many options are there, what's the speculative premium, what's the intrinsic value, and kind of break down this equation here in much more detail. Now, we have done a couple of previous videos on convertible bonds. In the first one, we introduced a lot of the terminology associated with convertible bonds. What is a conversion ratio? What is a conversion price? What do we mean by conversion premium? What do we mean by downside risk? And discuss kind of essentially what a convertible bond is. Then in another video, we went through and did a hypothetical convertible bond example. We were given some inputs and we went ahead and calculated what is the conversion ratio, what is the pure bond value, what is the conversion premium. And finally, we closed that by talking about the idea of equity sensitive convertible bonds versus interest rate sensitive convertible bonds and hybrid convertible bonds, and how that this is more of a continuum than a bucket. So not all equity sensitive bonds are equally equity sensitive. Not all interest rate bonds are equally interest rate sensitive. Instead, we have one extreme that's driven almost entirely by the underlying stock price. We have another extreme that's driven almost entirely by changes in the market rate of interest. And most bonds are going to fall somewhere between those two extremes on a continuum. In this video, what we want to do is get into more details on this convertible bond equals bond plus call option on the stock. So in our previous video, we were looking at a convertible bond issued by Gorilla Hub Restaurants, which are Gorilla Grub Restaurants, which is just a hypothetical example that I made up. And those bonds paid a 3.25% coupon rate and matured in 2044. The bonds were trading for $1,670. So if we look at the equation, convertible bond equals bond plus call option on the stock, the value of the convertible bond was $1,670. And we can break that down into what was the bond itself worth, and then what were the call options. Well, the bond itself can be calculated based on this pure bond value. What is the present value of the remaining coupon payments? Now, I'm filming this video in 2020. 2044 is approximately 24 years away. So we assume semi-annual coupon payments. 24 years is 48 semi-annual periods. We assumed that the risk associated with this bond purely on a ability to pay the coupon payments perspective entitled it to a 4% yield. 3.25% coupon means $32.50 in annual coupon payments, which was $16.25 semi-annually. $1,000 par value, returned at maturity, and that told us the bond was worth $884.98. So the bond value is just this pure bond value calculation, and that is $884.98, which means how much is left over for the call option. Well, if we know that the total value is $1,670, and $884.98 of it is based on the value of the bond itself, present value of the coupon payments, and par value, then what's left over has to be the call option. So we take the $1,670, subtract off the $884.98, and that means the call option for this bond is being valued at $785.02. So then the next question we have is, how many call options are you actually getting? The number of call options you're getting is based on this conversion ratio. The conversion ratio tells us how many shares of stock we can convert this bond into. So each bond basically is giving you the right, but not the obligation to buy whatever this conversion ratio is, number of shares for the strike price or that conversion price. So the number of options in this case is 45. The bond has a par value of $1,000. The conversion price was $22.22. That gave us a conversion ratio of 45 shares. So there are 45 call options with a strike price or exercise price of $22.22. Because the stock is currently trading for $33.50, which is well above the strike price, this option is currently in the money. And in the money just means if it matured today, you would decide to convert. Now note, that doesn't mean you're going to convert today, just like you don't want to exercise an option early. If you convert, you can only do that once. And then if something bad happens to the stock, you've given up the bond and you're just stuck with the stock. So you typically do not want to convert until right before maturity, barring some exceptions. There are some exceptions to that, which we're not going to go into in this video. But in most cases, just like you don't want to exercise an option early, you don't want to convert a convertible bond early. So this is an in-the-money option. Because the current stock price is $33.50 and the strike price is $22.22, the intrinsic value, and remember it's a call, so the intrinsic value is equal to the maximum of the current price of the stock minus the strike price, are 0. In this case, the current stock price is $33.50. Strike price is $22.22. Which gives us a value of $11.28. So the intrinsic value of each of the 45 call options is $11.28. The value of each option, remember there are 45 options, the total value of all 45 options is $785.02. So the value of each option is $17.44, which is why we don't want to exercise early. If we converted this option, we'd be effectively taking the 1128, but each option currently has a value of 1744. Converting now gives up this difference. So we'd be giving up over $6 per option, and there are 45 options with each convertible bond. We don't want to do that. Instead, if we want out of this position, we could sell the convertible bond, but converting right now gives up the speculative premium associated with each option. And the speculative premium is equal to the value of the option minus the intrinsic value, which is $6.16. So now what we've done is we've calculated that there are a total of $785.02 worth of options attached to this bond. Those options represent 45 individual call options with a strike price of $22.22. Those options are currently in the money. The intrinsic value of those options are $11.28, which means each option is worth 785 divided by 45, 1744, and that 1744 is split into the intrinsic value and speculative premium. So the speculative premium is $6.16. Now notice that This option has a lot of time to maturity, but it's also relatively deep in the money. So that's limiting some of the speculative premium, is that it's relatively deep in the money. Just like regular options, these are going to be impacted by the volatility of the underlying stock, the time to expiration, how close it is to the strike price, the risk-free rate. All those things that determine speculative premium in options are going to determine the speculative premium in convertible bonds. So that gives an overview of how to break a convertible bond down into the bond itself, plus the call options associated with that bond. Thank you.